Welcome to a new deep dive. Today we're pulling back the curtain on Anheuser-Busch InBev, or BOD, a company you probably know best through giants like Budweiser, Stella Artois, and Corona.
It's a really fascinating business because, its products are just everywhere, touching countless consumers daily. But the corporate side, the strategy, it's incredibly complex, operating across so many different global markets.
Exactly. And we've got a really solid stack of material to work with today, insights from a detailed research report by Compasscope. Plus, we have the company's most recent Q1 2025 earnings call transcript from May 8th.
Right.
So our mission is to kind of cut through the detail, connect the dots between the big strategic picture from the report and, the hard numbers from the latest results. We want to give you a clearer understanding of this global beverage leader.
Let's do it.
Okay, let's unpack this. So, AB InBev. When we talk about them, it's much more than just brewing beer, right? What are the different layers here?
You're right. It's a truly integrated operation. The Compasscope report lays out their core activity as, brewing, marketing, distributing drinks, but they're involved from sourcing the ingredients right through to managing digital sales.
Okay.
They essentially group their business into four key areas.
Four main areas. Okay, tell us about the first one.
Well, the largest, naturally, is the core beer business. This covers their massive portfolio, everything from widespread local favorites you'd find like Skol in Brazil or certain U.S. brands, right up to their global premium and super premium flagships.
Budweiser, Stella, Corona.
Exactly. Budweiser, Stella Artois, Corona. And these premium brands are crucial because they command higher prices, they appeal to consumers looking for something, a bit more aspirational. They also have craft brands like Goose Island in there, too.
Got it. So the heart is still beer, but quite a wide range. What else?
Then there are non-alcoholic beverages. And this isn't just like an afterthought. It's becoming a key growth area. Think alcohol-free versions of their big names, Budweiser Zero, Corona Cero.
Right, tapping into that health trend.
Exactly, addressing health and wellness trends directly. They also have significant partnerships for soft drinks in some markets, especially through AmBev in Latin America, which distributes Corona Antarctica and even PepsiCo stuff there.
Okay, non-alcoholic and soft drinks makes sense. And the third category, beyond beer. That one sounds like where things get maybe a bit newer for them.
It absolutely is.
Yeah.
This is their move into categories like ready-to-drink or RTDs, pre-mixed cocktails, hard seltzers, things like that.
Okay.
Capturing different consumption occasions. Names you might recognize here are Cutwater Spirits, Neutral Vodka Seltzer, Bud Light Seltzer. They also include flavored malt beverages like Flying Fish in South Africa.
So it's about diversifying, meeting consumers wherever they are.
Precisely. Tapping into convenience, specific flavor trends, maybe moments where a traditional beer doesn't quite fit.
That makes a lot of sense. And the final piece is less about the drink itself and more about how it reaches people.
That's exactly right. The fourth area is digital and distribution solutions. This is really foundational to their modernization push. Their BEES platform is a huge example.
BEES.
Yeah, it's a massive B2B e-commerce marketplace. It connects their distributors and wholesalers directly, streamlines ordering, supply chain management. Think of it as digitizing the corner store's relationship with the beer truck, basically.
I got it.
And they also build out direct-to-consumer DTC channels. That's another sales avenue. But it also gives them really valuable data on consumer behavior.
Okay, so that paints a detailed picture of what they do. Now let's turn to who they're competing with and how they stack up. What does the Compasscope report tell us about their competitive muscle?
Well, what's fascinating here is how their sheer scale translates into some pretty unique advantages. AB InBev's global footprint is just immense, and that gives them significant cost advantages. Buying raw materials, efficient distribution.
Scale matters.
Hugely. But it's not just being big everywhere. The report highlights their superior regional density in key growth markets. They hold truly dominant market shares over 50% in much of Latin America, even 65% in South Africa.
65%. Wow.
Yeah, it's deep market penetration, not just a few brands on shelves.
So they can get their product everywhere, often cheaper, and they kind of own the relationship in many places. And those iconic brands we mentioned, Budweiser, Stella, Corona, that has to be a huge edge.
Absolutely. The report highlights intangible brand assets as a major strength. These aren't just famous names. They have global recognition that lets AB InBev drive premiumization.
Right, getting people to pay more.
Exactly. Convincing consumers to pay more for perceived higher quality or status. They also focus hard on operational efficiency, using things like zero-based budgeting where every expense needs justifying each year. That helps keep margins strong.
Makes sense.
And remember that digital piece. The EBE's platform isn't just a side project, it's industry-leading, handling, I think it was 75% of their revenue digitally.
75%, wow.
Yeah, giving them unique market insights and driving more efficiency.
That sounds like a powerful combination scale, brands, tech. But no company is perfect, right? What are the headwinds they face?
The report does point out a few key vulnerabilities. While they're working on it, high debt levels are still a factor. That can constrain financial flexibility, especially if interest rates rise.
Always a risk.
And their heavy reliance on emerging markets, while it's a growth driver, also exposes them to volatility. Currency fluctuations are a big one. A strong U.S. dollar can make those overseas earnings worth less when they bring them home.
Right.
The market in China has also been a bit soft recently, which challenges their premium push there. And then there's that broader trend of consumers looking for alternatives to traditional lager beer, which is still, AB InBev's core strength.
So how do these strengths and challenges play out when we compare them directly to major rivals like Heineken, Carlsberg, Molson Coors?
The Compascope report does a good comparison. Generally, AB InBev comes out ahead on cost structure and operational efficiency, mainly due to scale. They've got stronger dominance in those crucial Latin American and African markets, and B's is seen as more advanced digitally.
Uh-huh.
But Heineken is noted as being stronger in innovation, especially in low and non-alcohol categories. And they have better penetration in premium trends in parts of Asia and Africa, where AB InBev isn't quite as dominant.
Okay. And the others, Carlsberg and Molson Coors.
Against Carlsberg, AB InBev's truly unmatched global scale and those globally recognized premium brands are bigger strengths. Carlsberg is more focused geographically, Europe, parts of Asia.
Right.
But Carlsberg does have a strong foothold in specific Asian markets like China and India.
Mm-hmm.
And their sustainability focus resonates well in some places. Molson Coors is, well, a different kind of competitor, heavily North American focused.
Lacks the global reach.
Exactly. Lacks AB InBev's global footprint and emerging market exposure. Molson Coors is pretty well positioned in North American hard seltzers and RTDs, but AB InBev's scale and cost structure give it much higher margins and better free cash flow.
So, pulling all that together, where does AB InBev stand overall competitively?
The conclusion from Compascope is that AB InBev holds a more defensible position overall. Their scale, emerging market dominance, top premium brands, efficiency, these create significant barriers to entry.
But they can't stand still.
Definitely not. Their peers has specific strengths. AB InBev needs to keep managing that debt, handle the risks of relying on volatile emerging markets, and maybe most importantly, really accelerate diversification into those newer beverage categories to keep pace.
It really raises that big question, doesn't it? Can they leverage their traditional strengths while fundamentally changing what and how they sell?
That's the core strategic challenge, I think.
Absolutely. Given that competitive picture, how exactly does AB InBev plan to grow? What's the strategy the Compascope report lays out?
Well, their strategy is built on several key pillars, many aimed right at those challenges we just discussed. First is premiumization. Keep pushing brands like Budweiser, Stella, Corona globally. Consumers trading up drives higher revenue per unit, better margins.
Makes sense.
And hand in hand with this is focusing on emerging markets. That's where the bulk of global population growth and future consumption growth is expected. AB InBev's existing density there is a major advantage to capture rising spending.
And the digital transformation we talked about, that's key to growth, too.
Oh, absolutely. Digital transformation is central. It's not just about efficiency. It's a growth engine. Scaling the BE's platform, its gross merchandise value hit, $49 billion in 2024? That was a 19% increase.
Huge numbers.
Yeah, it gives them unparalleled market insights, streamlined sales.
Yeah.
Expanding D2C channels also fits here, finding new ways to reach customers, learn directly from them. They're also prioritizing margin recovery post-COVID.
Getting back to pre-pandemic levels.
Aiming for it, yeah. Focusing on efficiency, pricing strategies, trying to get gross margins back towards that 60% mark they used to see.
So efficiency, digital reach, selling more premium stuff. What about those newer drink types?
That's portfolio diversification. Investing heavily in that beyond beer segment, scaling up low and non-alcohol options like Corona Cero. It's about capturing new consumers, new occasions where maybe traditional beer isn't the first choice.
Right.
And finally, deleveraging. Reducing debt is seen as crucial. Getting their net debt to EBITDA ratio below 3x, which they actually hit in 2024, frees up financial flexibility.
Flexibility to invest more in growth.
Exactly. Invest in these other growth areas, maybe pursue other opportunities down the line.
How does this strategy stack up against what their competitors are doing? Are they all doing the same things?
Well, there are similar elements, but different emphasis. Heineken is also pushing low-no alcohol and premium, but maybe with more focus on regions like Southeast Asia. Carlsberg is betting big on Asia, China, India, and sustainability. Molson Coors is largely focused on North America, diversifying heavily into beyond beer there.
So AB InBev's plan is unique in its global scale and the combination.
I think so. The combination of that global premium push, the deep emerging market focus, and the digital leadership. It's quite distinct.
And is this ambitious plan actually achievable for a company this massive?
The Compass Scope analysis seems pretty optimistic, actually. It suggests the strategy has strong long-term potential for both sales and profit growth. They've got the assets, the footprint, the brands, the efficiency focus, that leading digital capability.
So achievable.
Seen as highly achievable, yes. But, and it's a big but, success is still linked to managing those risks. Emerging market volatility, China's performance, and adapting fast enough to changing consumer tastes.
Right. Even the best strategy faces risks when you try to actually do it. What are the main hurdles AB InBev might trip over?
The report points to several key execution risks. Leverage is still on the list. While the debt's coming down, if interest rates spike unexpectedly, it could really increase their costs, reduce flexibility.
Always watching the debt.
Always. Their heavy emerging market exposure means they're constantly susceptible to swings in local economies, political instability, currency devaluation. That exchange rate volatility can significantly hit reported earnings, even if local business is fine.
And China was called out earlier as a challenge. Is that an execution risk too?
Absolutely. China weakness remains a near-term risk. Can they really execute their premium plan and strengthen their position there with the current market pressures? It's a big question.
What else?
There's the broader risk in executing premiumization globally where consumers keep trading up, especially if the global economy slows. And critically, there's the risk they might be comparatively slower than competitors in successfully diversifying into adjacent categories.
Like those seltzers and RTDs?
Exactly. Can they pivot fast enough and win in those newer spaces?
How do these risks compare to what their competitors face? Is everyone in the same boat?
Not exactly. Heineken, for example, might have less financial risk from debt, but faces more geographic concentration risk, especially in Africa and Southeast Asia. Carlsberg has higher risk tied to its big bet on volatile markets like China.
And Molson Coors?
Molson Coors arguably has the highest risk profile due to its heavy reliance on North America and its big push into newer, maybe less proven beverage segments. Limited geographic diversity is a key factor there. So the Compass Scope report concludes AB InBev faces, let's say, moderate execution risk overall. The main drivers are those emerging markets, FX, and the need to speed up diversification.
But their size helps.
Yes, they stress that AB InBev's immense scale, broad geographic diversity, and those digital initiatives do help mitigate some of these risks. Compared to peers, their execution risk is seen as lower than Carlsberg and Molson Coors, and probably comparable, maybe slightly lower, than Heineken.
All right, we've seen the strategic map, the potential pitfalls. Now let's look at the road in real time. That Q1 2025 earnings call gives us a snapshot of how this strategy is actually playing out right now. What did the latest results tell us?
Yeah, this is where the report meets reality, and frankly, the Q1 results were pretty strong. They hit the top end of their own expectations. EBIT, that key measure of operating profit, grew by a robust 7.9%.
Pretty solid.
And their underlying EPS, profit per share, grew over 7% in US dollars, but an even more impressive 20% if you strip out the currency effects. That shows real momentum in the core business.
I noticed, though, that reported volumes were slightly down, about 2.2%. How does that square with the positive earnings?
That's a great question, and it goes right back to the strategy. The company said the volume dip was mostly due to calendar stuff. The leap year timing shift from 2024, Easter falling later in 2025. Things that move sales between quarters.
Okay, timing effects.
Right. But despite lower overall volume, revenue was up 1.5%.
How?
Through a strong increase in revenue per hectoliter of 3.7%.
Ah, the premiumization effect again.
Exactly. Selling fewer units but making more money per unit. It's that strategy paying off directly in the numbers.
That makes sense. And their broad global reach seems to be providing some stability, some balance.
Yeah, absolutely. The call highlighted really strong performance across much of the world. Double-digit bottom-line growth in major regions like Middle Americas, South America, Africa, Europe.
What about North America? The U.S. has been tough for them.
Yeah, that was interesting. Management sounded quite encouraged. They actually said their portfolio there has reached an inflection point suggesting a turnaround, and they're increasing investments.
An inflection point. That's quite a statement. Did they give specifics?
They mentioned gaining market share in beer and spirits-based RTDs there, pointed to Michelob Ultra and Busch Light as top volume share gainers in beer. And in RTDs, Cutwater and Neutral showed strong double-digit volume growth.
So some positive signs in the U.S.
Yes, though they acknowledged the broader U.S. market was soft in Q1 due to weather and that late Easter. Off-premise sales were down according to industry data, but they saw improvement in April and sounded optimistic for the summer.
Any other regional bright spots from the call?
Mexico saw mid-single-digit revenue growth despite those calendar impacts on volume. Colombia had record-high volumes. Brazil was a standout record volumes for both beer and non-beer, driving double-digit profit growth.
Brazil sounds strong.
Very strong. Europe also saw strong premiumization boosting EBITDA significantly, led by Corona and Stella Artois. South Africa gained share in both beer and beyond beer, again with premium brands leading the charge.
Okay, now what about China? The Compascope report flagged that as a challenge. How did it look in Q1?
Yeah, the call indicated the overall industry in China improved a bit sequentially, but AB InBev still underperformed slightly. Management put this down mainly to softness in their key regions within China and a slower recovery in bars and restaurants in the on-trade channel.
So still work to do there.
Definitely. They said they're focused on strengthening execution, increasing investment in brands like Budweiser and Harbin, pushing harder in stores for in-home consumption, and scaling up innovations like Harbin Zero Sugar. They stressed long-term confidence despite the current softness. Looking across the brands, those strategic pillars were definitely visible in Q1. Their mega brands grew revenue by 4.4%. Corona, which is celebrating 100 years, had a great quarter revenue up over 11% outside Mexico.
100 years, wow.
Yeah, and it was named the most valuable beer brand globally for 2025, selling at a significant premium, about 20% above average.
And the focus on non-alcoholic, those balanced choices, how's that going?
That's a huge success story in Q1. Non-alcohol beer volumes absolutely soared up 34%, led by Corona Cero's incredible triple-digit growth.
Triple-digit? That's massive.
It is. And see, this isn't just cannibalizing alcohol sales. They estimate 65% of that non-alc volume is coming from new consumers or new occasions. It ties into their goal of increasing participation. They reckon they added the equivalent of 6 million new legal drinking-age consumers in the past year.
And the digital platforms, BEs and D2C, how did they perform?
Strong momentum there, too. The overall BE's platform GMV, that total transaction value, was up 10% year over year, reaching $11.6 billion in Q1.
$11 billion in one quarter.
Just through that platform.
Yeah.
And the BE's marketplace, the B2B e-commerce part, grew GMV even faster, a massive 63% in Q1. Shows how quickly they're digitizing those B2B relationships. Their direct-to-consumer channels also saw good growth, revenue up 12%.
So the digital engine is humming. They also saw margin improvement in Q1.
Yes. EBITDA margins improved by over 200 basis points. That's 2 full percentage points. Margin expansion in 4 out of their 5 regions. They put it down to smart pricing, that premiumization effect, and continued operational efficiency.
And the outlook.
Their CFO said while commodity costs and currency might create pressure during the year, they have good visibility and reaffirmed their overall outlook for 2025 EBITDA growth, expecting it between 4% and 8%.
And the fact that they operate so locally was mentioned as a benefit.
Correct. They stressed over 98% of their volumes are produced locally. Use the U.S. as an example. Local breweries, farmer suppliers, it gives them resilience, limits direct exposure to tariffs or complex global supply chain issues for most of their product.
The earnings call also seemed to shed light on specific analyst questions, digging into the U.S. strategy, consumer health, volume outlook, cost savings.
Right. The U.S. commentary really emphasized it's a deliberate multi-year investment driving the current momentum. On the consumer, they distinguish between, sentiment versus actual buying, noting beer's resilience and how their portfolio covers different price points.
So they can cater to different budgets.
Exactly. Cost improvements in SG&A and finance costs were linked to ongoing optimization. And the deleveraging efforts, less debt means less interest expense. And the Beyond Beer acceleration, they attributed it to a clearer strategy focusing on key global brands like Cutwater and Neutral, and strong execution tapping into consumer desire for convenience and branded options, often in smaller packs.
Okay, based on everything we've discussed, the report's analysis, the latest results, what are the absolute key things you should be watching if you're following AB InBev going forward?
Well, the Compascope report gives us a rank list, and it lines up perfectly with what we saw in Q1. Right at the top is premiumization execution. Can they keep convincing consumers globally to trade up, especially if economies tighten?
That feels critical.
It is. Closely tied is emerging market stability and growth. These markets are the engine for volume and value, but they're inherently vulnerable to economic shocks, currency volatility.
And China specifically is worth watching.
Yes, China recovery is called out specifically. Can they improve performance in that huge market, especially premium and bars restaurants, amidst the current pressures? You also have to watch commodity and input costs.
Supply chains, energy.
Exactly. Unpredictable factors can squeeze margins.
And those changing consumer habits we keep coming back to.
Absolutely. Consumer shifts toward alternative beverages. Will things like seltzers just eat into beer sales, or can AB InBev grow the total pie and really compete effectively in these newer spaces? Related to that is watching digital platform performance, BES and D2C.
Are they delivering the goods?
Right, delivering the expected efficiencies, driving sales, providing that data edge. Also on the list, U.S. market dynamics, can they keep that positive momentum going in their biggest market? Deleveraging progress and balance sheet flexibility for their debt reduction frees up capital. Regulatory and taxation development is always a factor in a global business like this.
Affects costs, pricing.
Could impact both. And critically, the performance of the Beyond Beer segment is it truly delivering the needed diversification and growth.
And FX volatility and ESG factors made the list too.
Yes, FX volatility remains a constant risk because of that emerging market exposure. It hits reported financials even if local performance is strong. And finally, environmental and social governance, ESG factors. Expectations are rising, requiring investment, impacting costs, but also brand reputation.
Can't ignore ESG these days.
Definitely not. It can influence consumer choice and investor sentiment.
That's a really comprehensive set of factors shaping the future for this company. A lot to keep track of.
Yeah, we've covered a tremendous amount in this deep dive. We went from understanding the different pieces of AB InBev's global business, weighing their pretty formidable competitive strengths against some significant challenges.
Right. Through outlining their multi-pronged growth strategy and the key execution risks involved.
To analyzing how that strategy is actually playing out right now based on their recent Q1 results, and finally identifying those critical factors to keep an eye on going forward.
It's really clear this is far more than just a simple beer company. It's a complex global operation navigating these massive shifts in consumer taste, using digital tech to transform itself, managing the volatility of being so deep in diverse emerging economies.
All while strategically working to reduce that substantial debt load built up over years of acquisitions.
Yeah.
You know, if we step back and connect all these threads, AB InBev's story really raises a fundamental question, maybe for any large established company built on traditional products and distribution. How does a global giant like this, with immense scale and iconic legacy brands, successfully reinvent itself for the future? Through digital, through diversification into totally new categories.
While still relying heavily on its classic core product.
Exactly. Especially when so much of that core relies on potentially volatile markets around the world. It's a fascinating balancing act.
That's a powerful thought to consider as we wrap up. This deep dive has certainly given us, and hopefully you, a lot to think about regarding the future of beverages and global consumer trends. Thanks for joining us.
Yeah, thanks.
I hope this has provided you with a clearer, more insightful picture of Anheuser-Busch InBev and the dynamics shaping its path ahead. Keep exploring the sources and thinking about how these pieces fit together. This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.